Welcome back, Alpha. The markets are closed for the week of January the 10th, 2025. All right. Had a nice gap up to start the week. Nice little push higher to start Monday, first half of Monday, really. And then we just kind of, pulled back a pretty good amount there as we kind of went into the closing parts of the day. A little bit of a bounce there in the last hour, but not too crazy. And then Tuesday, nice little gap up, faded pretty much the whole day down, ended basically towards the session lows. Wednesday, basically flat open, sideways trade, and then we were closed Thursday, and then Friday, nice little gap down, trade lower. First half of the day, tried to bounce going to the second part of the day, and rolled back down here a little bit to close out Friday. As far as some of the data we got this week, on Tuesday, we wound up getting the JOLTS job openings that came in at 8.1 million. Forecast is calling for 7.7 million, so nice little beat there, and we did uptick from prior from 7.8 million. So that was a pretty good, nice little number that came in there. And then we had initial jobless claims came in at 201K. Forecast is calling for 218K, so that's a pretty good beat there. And prior was 211K, so even a downtrend from previous number. So there you go. That was pretty good. And then Friday, we got the non-farm payrolls, which came in at 256K. Forecast was calling for 160K, and then prior came in at 212K. So definitely beat forecast and definitely beat prior. Pretty good amount. The one thing that a lot of people were kind of a little spooked about was the manufacturing payrolls, which actually declined 13K. Forecast was calling for 5K type number, and that was definitely a pretty good big drop off from 25K prior. So a pretty good beat on non-farm payrolls, but the manufacturing definitely took a pretty good hit there. We also got unemployment rate Friday, came in at 4.1%. Forecast and prior was at 4.2%, so a little bit of a drop there. All right, and as far as sector rotation that we got going on for the week, we had energies, healthcare, materials all doing pretty good. Industrials underperformed. And as far as sector rotation for the week, we had energies, healthcare, materials all outperforming and actually positive for the week. We had industrials outperforming but negative for the week. And then you got utilities kind of in line with the market there. Communications and discretionaries a little bit underperformance. Staples, financials, and tech underperformed. And real estate at the lower end of the week. The interesting thing about tech is it actually started out the week pretty hot and then just kind of faded down pretty much the whole week from that high point on Monday. The VIX definitely came out looking like it was going to drop off to kind of start the week, with a nice little climb back higher. Just kind of was hanging around the 17 level, but it's not really making a strong direction either way. Dollar has continued to be an absolute monster for the past several months. How long is this going to go on for? Well, the next kind of higher levels that we're going to get to, we're starting to get into those roughly those areas. So I would just be mindful that it could go a little bit higher, but you're getting kind of some extendedness here over the past couple months. So, if you want to start dialing it back, I'd be dialing it back. GLD Gold Trust, very interesting move there on Friday, up as well with golden yields, but it looked pretty good. I don't know if we're really going to get that breakdown through that 100. It doesn't look like we're going to get that yet, so we might make a run, push into all-time high territory there for the GLD Gold. And maybe then we have a pretty decent rollover to the 200 moving average. But as for now, this is looking pretty good. I think we're probably going to go higher on gold. Yields coming out and absolutely shredding some stuff this week. The interesting thing is we actually took out that high from a year ago in April. Not quite a year ago. But we'd gotten up to that area this past week. And on Friday, smashed through that high and actually closed above it. So, yields staying strong, which is not good for bonds. HYG high yield corporate bond, nice little drop off. I mean, pretty strong drop off this week, especially there on Friday. So, HYG, even though this is the one that's been looking the best out of the three, I kind of keep an eye on here. Here's a look at the LQD. LQD kind of getting into some lower levels here that it's had earlier last year, I guess. It's not like I would want to be looking to be bearish here on the LQD at this level, right? You're kind of probably start to see at least a little bit of bounce. Got a little bit of a stretchness to it here over the past couple of weeks. So LQD getting a little bit more of like maybe a counter trend there. TLT also kind of getting to this lower level. We might just have like one day where we just kind of see yields really bounce and then bonds really drop off, and then maybe we see some consolidation before we see a rollover later on. But you know, we've seen some pretty good moves for the bond prices that are a little bit extended into that bearish direction, and we're also coming into some support levels. So might be a time where we kind of just look and see some consolidation, resting, you know, reassessing of what is expected out of yields and bonds. The RSP, equal weight SP 500. Obviously, we all know about that huge move lower that happened there in December. Kind of looks like a nice little choppy pattern sideways. This could also be an ABCDE type of correction here, so I don't want to be extensively and aggressively bearish here. The other thing is a lot of these, you know, ETFs, they're going to be having some, you know, support levels or some kind of moving average just below where they currently are. RSP has one, the 200 moving average just below where it is, and we might I would probably be looking for a bounce from that kind of level. Earlier this week, I was kind of thinking, yeah, okay, maybe we do go higher from here, and then once we saw some price action on Tuesday, it's kind of thinking, yeah, maybe we'll see a lower move compared to some of the lows that we had already put in at the end of December, and then maybe you see a decent bounce off of that level. So it's kind of what I'm thinking now. Here's a look at the DIA. DIA also has that breakdown. A little bit more room down to that 200 moving average, but you do have some technical levels here. Just some little pivot levels, even before you get to that 200 moving average, to kind of be mindful of. Even here on the IWM, interesting. A little bit more of a lower wick there on Friday, and it was really close to that 200 moving average. So not looking too bad there, even though the IWM kind of got smoked a little bit there on Friday. Qs, not looking nearly as bad. Obviously, it was having kind of a struggle bus for most of the middle part of 2024. And yeah, it didn't even close below the low it put in on January 2nd. So a little bit lower wick there. Not too far to go down to that 100 moving average, even if it does break down. And here's a look at the SPY closing right on top of that 100 moving average. So definitely could be that ABCDE type of correction. And maybe we kind of just slowly chop around here for the next week or two. And then maybe look to move out of here or something like this. And then maybe look to move out, do something like that. Maybe it's a slow grind back up to all-time highs. You know, I'm not expecting anything, you know, like rip roaring. I still think there's going to be plenty of issues that kind of go on going forward. A lot of it has to do with government debt and spending. Alpha owners, have a great rest of your weekend and take care.